All right, chapter 14 is a good one. It's a little challenging, but it's an interesting one, I think, because we're going to be talking about another financial statement that we've tangentially been looking at every now and then, but now we're going to spend a whole chapter talking about this statement of cash flow. Okay, this is like the next, uh, of the. Okay, let's just do a basic review. What are the three uh, kind of financial statements we've already been doing? What are the two main ones? Like the two core ones that we spent a lot of time with. What are they? Balance sheet, okay. And then what's the other one? Income statement. Okay, these two you can think of as like the two like very core ones. Okay. What's the one that we talked about last chapter? Yeah, the statement of equity. Okay. Now, I would say this is like the least in the real world, the least of the four that are like scrutinized. These two are one and two. The statement of cash flow is the third most important. That is actually like if you're analyzing a business, those three are going to be the core ones that you're going to care about. Okay. Um, there's actually, as you saw, a lot of nuance happening here. Um, and especially with topics like stock-based compensation, stock buybacks. This is actually an important one too. If you want to get a full understanding of kind of the valuation of the business, you can't ignore this. But I would say it's the one that people least look at and probably least understand. Okay. But these other three, I would say that you need to understand what they are, what they represent, and why they're important. Okay. I would say the statement of equity is more of an advanced analysis. Okay. But if you're even buying like an ice cream shop, okay, you're gonna care about the balance sheet, the income statement, and the statement of cash flow. And a lot of times the income statement and the statement of cash flow will be very almost the same for a small business. Why would that be? Or like at least the income statement is not going to need much adjusting. Why is that? What do we talk about the different bases of accounting? What is many small businesses usually do? Exactly. So that remember we had accrual-based accounting and cash-based accounting, right? So if you're using a fully cash-based system, then you're not going to need the cash flow statement because everything is going to just be presented as cash on the income statement. You would expense something only when the cash goes out. Even if you're buying an asset, you're not going to have depreciation expense. You're just going to expense the purchase of the machine or whatever. And so you wouldn't really need a cash flow statement. But since GAAP and more complex businesses use accrual for all the reasons that we talked about, matching principle, conservatism, all those principles we talked about, we are going to need a way to cut through all of that and look at the cash that's going in and out. And that's what this statement of cash flow is trying to achieve. Okay, so the way that it kind of is divided up is that there's three main like types of cash flow: operating, investing, and financing. And so we're gonna see that the statement of cash flow has three different sections where you're kind of dividing up what happened with cash into these categories. Most businesses use the indirect method of compiling this financial statement. It is much more confusing than a direct method, but it is kind of the standard. Okay, uh, and we'll see why why it's confusing and as we get into the chapter. But you're gonna have to understand the indirect method because that's like kind of the vast majority of public companies are going to present their statement of cash flow using the indirect method. And it's really only different for one of the sections. So we again have these three sections. Only the operating section is really different. Okay, the other investing and financing sections would be pretty much the same under the indirect and the direct method. So, but you're going to see there's some complication in this operating section because of the indirect method. We'll talk about free cash flow. This is a financial metric that is quite commonly referred to. So it's going to be worth you all knowing what it is. And then we'll briefly just show you a statement of cash flow using the direct method. And I think after you've gone through this chapter, you'll be able to appreciate how direct, as the name implies, and simple the direct method is.